Most traders don't lose money because they're wrong. They lose money because they're early and they confuse noise for strength. I want you to imagine this moment with me. The chart is quiet for weeks. Then suddenly, price explodes upward. Volume spikes. Twitter lights up. You feel that familiar tightening in your chest, the urgency, the fear of missing out. Your finger hovers over the buy button. This is the breakout. You tell yourself, this one is real. I've been there. And if you're honest, you have too. When I first began trading, I believed breakouts were gifts, rare moments when the market revealed its intention clearly. A clean line, a sharp move, confirmation enough to act. But over time, through painful losses and quiet observation, I learned a brutal truth. Most breakouts are lies. Not malicious lies, but seductive ones. They show you strength that hasn't yet earned the right to exist. Nicolas Darvas understood this long before most modern traders were even born. He didn't sit in front of 6 screens. He didn't chase every move. He didn't worship indicators. He watched behavior. And behavior, in the market, tells the truth long before price does. This documentary is not about avoiding breakouts. It's about understanding why they fail emotionally, and why intelligent traders keep falling into the same trap again and again despite knowing better. Because here's the paradox: the more obvious a breakout looks, the more dangerous it often is. False strength doesn't whisper. It shouts. It rushes. It demands urgency. And the human brain, wired for survival, not patience, responds exactly the wrong way at exactly the wrong time. Darvas believed the market had to prove itself before it deserved his capital. He didn't trust the first move. He trusted structure. He trusted containment. He trusted the quiet discipline of waiting while others acted on impulse. This is where most modern traders struggle. We live in an era of instant feedback, 1-minute charts, push notifications, breaking out now, alerts. But Darvas traded in a way that feels almost uncomfortable. Today he waited for confirmation that felt boring, slow, even foolish to impatient eyes. Yet that boredom was his edge. In this first section, I want to slow you down. I want to pull you out of the heat of the trade and into the cold clarity of observation. Because before we talk about rules, boxes, or breakouts, we need to talk about context, about why your mind wants to believe strength exists before it actually does. A breakout is not strength. A breakout is a question. The market is asking, will you chase me, or will you demand proof? Most traders answered quickly. Darvas didn't. He understood that price must pause before it can proceed. That true strength doesn't explode, it compresses. It survives pullbacks. It resists gravity. It holds its ground when excitement fades. And when it finally moves, it doesn't need your hope to sustain it. As we move through this documentary, we'll dismantle the illusion of false strength layer by layer. We'll examine why breakouts fail psychologically, how Darvas filtered them with ruthless discipline, and how you trading in today's chaotic, hyperspeed markets can apply the same timeless logic without needing to copy the past. But first, ask yourself this honestly: how many times have you bought a breakout that felt powerful, only to watch it collapse minutes, hours, or days later? Comment below, what did you feel in that moment? Because until you understand why that moment feels so convincing, the market will keep teaching you the same lesson at your expense. In the next section, we're going to confront the inner conflict every breakout trader faces: the tug-of-war between patience and participation, discipline and desire, and why the market exploits that conflict relentlessly. The market doesn't defeat most traders with complexity. It defeats them by forcing a decision before they are psychologically ready to wait. There is a quiet war happening inside you every time price approaches a breakout level. On one side is discipline, a part of you that knows patience pays, that confirmation matters, that waiting is not weakness. On the other side is fear of missing the move, fear of being left behind, fear that this time the market will run without you. This is the market paradox. The very moment you feel most certain is often the moment you should be most cautious. I've felt this conflict more times than I can count. You study the chart. You mark the level. You promise yourself you'll wait for confirmation. And then price starts creeping higher. Volume ticks up. Candles grow larger. Suddenly, the future you imagined waiting for seems to be happening now. Your rules feel slow. Your patience feels outdated. And your mind whispers, if you don't act, someone else will. Nicolas Darvas knew this internal battle intimately. He wasn't immune to emotion, he was human. But he designed his entire method around neutralizing this conflict before it could sabotage him. He didn't rely on willpower in the heat of the moment. He relied on structure, because willpower collapses under urgency. The paradox deepens when you realize this. Markets reward participation, but punish anticipation. Every breakout trader wants to be early. Early feels smart. Early feels elite. Early feeds the ego. But early also means you're absorbing the highest uncertainty with the least information. You're betting on potential, not proof. Darvas rejected that premise entirely. He believed that if a stock truly possessed strength, it would not escape him. True leaders don't vanish in a single candle. They build bases. They test highs. They invite doubt before they demand commitment. But the human brain hates that waiting period. The brain equates inactivity with danger. It confuses patience with passivity. And the market exploits this wiring mercilessly. False breakouts exist not because markets are evil, but because human behavior is predictable. When price nudges above a resistance level, the crowd reacts emotionally, not analytically. Early buyers rush in. Late sellers cover. Momentum ignites not because institutions have committed, but because retail fear has activated. And here's the cruel irony. That emotional surge creates the exact liquidity professionals need to sell into strength. Darvas understood that the market tests traders psychologically before it rewards them financially. A stock that truly wants to go higher will refuse to fall after breaking out. It will frustrate bears. It will bore bulls. It will move sideways while emotions cool. But most traders never wait long enough to see that behavior. Inside you, the conflict intensifies. If I wait, I might miss it. If I enter now, I might be wrong, but at least I'm in. This is not a technical decision. It's an emotional negotiation with uncertainty. Darvas solved this by reframing the problem. He didn't ask, will this breakout work? He asked, has the market earned my trust? Trust, in his world, was built through repetition and restraint. A stock had to prove it could hold above a level. It had to stay within a box. It had to demonstrate resilience when attention faded. If it failed, Darvas didn't feel rejected. He felt protected. Modern traders often experience failed breakouts as personal failures. Darvas experienced them as filters. Each failure removed a weak candidate from consideration. Each false move clarified reality. And this is where the paradox becomes your teacher. The trades you skip often matter more than the trades you take. The market is not asking you to be faster. It's asking you to be more selective. Be honest, when you see a breakout starting to move without you, do you feel calm or do you feel pressure to chase? Comment below. Your answer reveals more than you think. In the next section, we're going to dissect the psychological trap at the core of failed breakouts, the illusion of strength and why your brain is wired to fall for it again and again, unless you consciously reprogram your approach. False breakouts don't trick your strategy, they hijack your identity as a trader. At the core of most failed breakouts is not a flawed chart pattern, a bad indicator, or unlucky timing. The real problem lives deeper in the psychology of how we interpret strength. The market shows you motion and your mind fills the meaning. You see price accelerating and you assume conviction. You see volume expanding and you assume institutional interest. But assumptions are not evidence, they are projections. This is the psychological trap. We confuse movement with commitment. I remember staring at charts late at night, replaying losses, asking myself how something that looked so strong could fail so completely. The candles were clean. The breakout level was obvious. Everyone saw it. And that was the clue I ignored. Everyone saw it. Nicolas Darvas believed that obviousness was not confirmation, it was danger. When a setup is universally visible, the emotional participation increases faster than the structural commitment. The move becomes crowded before it becomes proven. Your brain loves clarity. It craves certainty. A breakout provides both visually, emotionally, instantly. It gives you a story you can believe in. This stock is going higher. Stories reduce anxiety. Waiting increases it. And so, without realizing it, you trade not to make money but to relieve discomfort. Darvas saw this clearly. He noticed that traders weren't entering because their rules told them to. They were entering because uncertainty had become intolerable. The breakout wasn't a signal, it was an emotional escape hatch. Here's the deeper issue. Most traders don't fear losing money as much as they fear being wrong alone. When a breakout happens, social proof activates. Others are buying. News appears. Commentary increases. Suddenly, being wrong feels safer because you're wrong with the crowd. But Darvas didn't want safety, he wanted asymmetry. He understood that real strength doesn't need applause. It needs endurance. False breakouts often fail because they lack time. They move too fast, too soon, fueled by anticipation rather than accumulation. Institutions don't chase their position. They absorb. They wait for weak hands to reveal themselves. And weak hands reveal themselves emotionally. The trap tightens when price pulls back slightly after the breakout. This is where psychology collapses. The same traders who chase strength now panic at weakness. They sell into minor pullbacks, creating the very failure they fear. Darvas watched this behavior and built rules to avoid being part of it. He didn't enter on the first break. He entered after the market demonstrated it could survive skepticism. That's the part most traders skip. Modern markets amplify this trap through speed. Algorithms trigger momentum. Social media magnifies excitement. Charts compress time. What once took weeks now happens in hours. But the psychology hasn't changed. Strength still requires proof, and proof still requires patience. The core problem is not that traders don't know this, it is that knowing it intellectually doesn't protect you emotionally. In a moment, your identity is at stake. You want to feel competent, decisive, in sync with the market. Darvas removed identity from execution. He didn't care how smart he looked. He cared whether the stock behaved correctly after the breakout. If it failed, it wasn't an insult, it was information. This shift from ego to observation is the psychological breakthrough most traders never make. When a breakout fails on you, do you immediately look for another trade? Or do you pause and study what the market just revealed? Comment below your habit here defines your long-term results. In the next section, we'll step directly into Darvas's mindset, explore how he redefines strength, confirmation, and trust, creating a framework that filters false breakouts before they ever touch your account. Nicolas Darvas didn't ask the market where it was going, he asked it to prove where it had already been. This single shift in perspective is what separated Darvas from the crowd. While most traders obsessed over prediction, Darvas obsessed over verification. He understood that the market's future intentions were unknowable, but his present behavior was measurable, repeatable, and brutally honest. To Darvas, a breakout was not an invitation. It was a test. He believed that strength could not be declared, it had to be defended. A stock claiming strength had to hold that claim under pressure. It had to remain elevated when excitement faded, when volume normalized, when attention moved elsewhere. This is why the Darvas box exists not as a pattern, but as a psychological filter. The box represented containment, boundaries, proof of balance between buyers and sellers. When price stayed inside that box, Darvas knew something important was happening beneath the surface. Accumulation was occurring. Weak hands were being replaced by strong ones. Most traders see sideways movement as wasted time. Darvas saw it as essential preparation. In his world, price could only be trusted after it demonstrated restraint. A stock that rushed upward without building a box was suspect. It hadn't proven stability. It hadn't earned continuation. And here's the critical insight. Darvas believed the absence of decline was more important than the presence of advance. Let that sink in. Modern traders look for upward motion. Darvas looked for downward refusal. He watched how a stock behaved when it should have fallen but didn't. That was real strength. If price broke above the box and immediately fell back inside, Darvas didn't argue. He didn't rationalize. He didn't hope. He exited a door, never entered at all. Hope was not part of his system. This is where his mindset becomes uncomfortable for most traders. Darvas accepted being late. He accepted missing moves. He accepted boredom. What he did not accept was ambiguity. He wanted the market to remove doubt for him. His entries were not exciting, they were boring. By the time Darvas entered, the emotional surge had already passed. The crowd had either been shaken out or exhausted. What remained was structure, and structure is what false breakouts lack. Darvas also understood that every breakout must answer a simple question. Can this level become support? If the answer wasn't immediately yes, the breakout was guilty until proven innocent. This perspective transforms how you view price action. Instead of chasing highs, you observe reactions. Instead of celebrating momentum, you study pullbacks. Instead of asking how high can this go, you ask how much damage can it survive. Darvas traded defense first, offense second. He knew that capital preservation was not passive, it was aggressive patience. Modern traders often mistake speed for sophistication. Darvas proved that selectivity was the real edge. He waited while others acted, and when he finally acted, the market had already aligned itself with his position. False breakouts couldn't survive his filters. They exposed themselves quickly by failing to hold, by falling back into chaos, by revealing that their strength was borrowed, not earned. If you judge strength by how well a stock holds a level rather than how fast it breaks it, how many of your past trades would you avoid? Comment below. In the next section, we'll bring this philosophy to life through a real-world style story, walking through a breakout moment step by step, and watching how false strength reveals itself to those who know what to look for. The market doesn't expose false strength immediately, it lets you believe in it first. Let me walk you through a moment that every breakout trader recognizes, not as a chart pattern, but as a lived experience. A stock has been moving sideways for weeks. Tight range, clean highs, clean lows. You've marked it on your watch list. You feel disciplined. You're waiting. Then one morning, price surges above the range. Volume expands. The candles are wide and confident. Financial media mentions it. Social feeds light up. This is the moment everyone waits for. The breakout looks perfect. I remember watching a setup exactly like this textbook by modern standards. The breakout candle closed strong. No upper wick. Momentum indicators screamed continuation. Everything aligned, except one thing. The stock didn't stay there. By midday, price stopped advancing. By the close, it drifted sideways. No collapse, but no progress either. The next day, it dipped slightly. Nothing dramatic, just enough to make early buyers uncomfortable. This is where false strength begins to reveal itself. Darvas would have done nothing here, and that nothing is the story. Most traders, however, react. Some add, convincing themselves it's a healthy pullback. Others panic, fearing they've been trapped. The emotional range narrows. Focus intensifies. Every tick feels personal. Then comes the real test. On day 3, price attempts to push higher again but fails. It touches the breakout level and retreats. Volume fades. Enthusiasm evaporates. The crowd that rushed in now waits, unsure. And suddenly, what felt like strength now feels fragile. Darvas watched this behavior carefully. He understood that real breakouts attract opposition. Sellers test them. Bears challenge them. If the breakout survives, that challenge of price holds above the box, then, and only then, does strength become real. But false strength avoids confrontation. It fades quietly. In this story, the stock slipped back into its prior range. No crash, no drama. Just a slow return to indecision. The breakout had promised direction, but delivered ambiguity. Most traders lost money here not because the move failed violently, but because it failed politely. They were chopped up by hope and hesitation. Darvas avoided this entirely by demanding a simple behavior. Price must remain above the box. If it couldn't, the story was over. This real-world pattern repeats endlessly across markets and time frames. False breakouts rarely announce their failure loudly. They dissolve. They exhaust. They test your patience until you make a mistake. The brilliance of Darvas's approach was that it didn't require prediction. It required observation. He didn't need to know why the breakout failed. He only needed to see that it failed. And by stepping aside, he preserved both capital and clarity. Have you ever been trapped in a breakout that didn't collapse, but slowly drained your confidence instead? Comment below if this story feels familiar. In the next section, we'll descend into the emotional low point, the moment where traders either double down on hope or finally confront the truth about false strength. The most dangerous moment in a trade is not when you losing money, it is when you losing clarity. This is the phase no one talks about. The breakout has failed, but not enough to force a decision. Price hasn't collapsed. It hasn't exploded. It's hovering in that cruel middle zone where hope still breathes, but conviction is gone. You're in the trade, or maybe you're watching it, unsure whether to enter, exit, or wait. Either way, your mind is trapped. I've lived this moment. You check the chart obsessively. Every small uptick feels like relief. Every downtick feels like betrayal. You stop thinking in probabilities and start thinking in narratives. Maybe institutions are accumulating. Maybe this pullback is healthy. Maybe tomorrow it runs. This is the emotional low point, the quiet erosion of discipline. Darvas recognized this state as poison. He knew that uncertainty doesn't just hurt performance, it damages decision-making long after the trade ends. A trader stuck in ambiguity becomes reactive, not strategic. False breakouts thrive here. Why? Because they don't force resolution. They keep you emotionally invested without rewarding you financially. They drain confidence slowly, replacing clarity with second-guessing. At this point, most traders commit one of two fatal mistakes. The first is doubling down on hope. They add to the position to justify the initial decision. They search for confirmation bias. They widen stops. They rationalize weakness as opportunity. The second is emotional abandonment. They exit impulsively, often right before the stock finally stabilizes, thence were never to trust breakouts again. Both outcomes are born from the same root, a lack of predefined rules. Darvas never reached this low point because he refused to negotiate with uncertainty. His rules were not flexible, they were protective. If a breakout failed to hold, it was gone from his focus entirely. No debate, no drama. This emotional turning point is where traders either evolve or repeat the cycle indefinitely. You either learn that not being in a trade is a position, or you remain trapped in the need to always participate. Darvas chose absence over anxiety. He understood that every moment you spend emotionally entangled in a weak trade is a moment you rate unavailable for a strong one. Clarity is a resource and false breakouts consume it aggressively. This is the realization that changes everything. You are not paid for being right, you are paid for being aligned with strength. And alignment cannot coexist with emotional confusion. When a trade stalls and your conviction fades, do you tighten your rolls or do you loosen them? Comment below. Your answer reveals your growth edge. In the next section, we'll uncover Darvas' breakthrough rule, the simple but ruthless principle that allowed him to sidestep this emotional collapse entirely. Darvas didn't wait for confidence, he waited for proof, and he made proof non-negotiable. This is where Darvas' genius becomes almost uncomfortable in its simplicity. After experiencing the emotional chaos that false breakouts create, he arrived at a rule so strict that most traders would reject it on impulse. His breakthrough lesson was this: a stock must stay above its breakout level, or it does not deserve my attention. No exceptions, no reinterpretation, no second chances. Darvas understood something that most traders resist accepting: rules only work when they are enforced without emotion. The moment you allow discretion during uncertainty, your psychology, not the market, takes control. So he removed discretion entirely. He defined a box. He waited, and when price broke above that box, he demanded immediate behavioral confirmation. If price returned inside the box, the verdict was final: false strength. This rule did two things simultaneously. First, it protected his capital. Second, it protected his mental bandwidth. Darvas knew that trading is not just about money, it's about attention. Every questionable trade consumes focus that could be directed toward a truly strong opportunity. He didn't try to fix bad trades. He didn't try to rescue weak breakouts. He let them go. And here's the part most traders miss. Darvas was willing to be wrong quickly so he could be right meaningfully. False breakouts expose themselves early if you're willing to look honestly. They slip back into ranges. They fail to attract follow-through. They hesitate where they should accelerate. Darvas didn't interpret these signs emotionally. He interpreted them mechanically. This breakthrough rule transformed his relationship with the market. He no longer feared missing out because he trusted that real strength would stay visible. A move worth capturing would not vanish the moment he demanded confirmation. This is where modern traders struggle. We are conditioned to believe that opportunity is scarce, fleeting, and fast. Darvas believed opportunity was abundant, but only for those patient enough to filter. His rule also reframed losses. A small loss was not failure, it was the cost of information. Each stopped-out trade refined his understanding of market behavior. And because his losses were small and his winners were allowed to run, the math worked in his favor over time. This lesson is timeless. If you adopt nothing else from Darvas, adopt this. Strength that cannot hold is not strength, it is advertisement. The market advertises constantly. Your job is not to respond to every message, but to verify which ones are real. If you enforce one hard rule, if it falls back inside, I'm out, how many emotional trades would disappear from your history? Comment below. In the next section, we'll translate this rule into today's market's faster charts, noisier data, and relentless information, and show how Darvas' principle remains not just relevant, but necessary. Technology has changed the market's speed, but it hasn't changed human weakness. Modern traders like to believe they're operating in a completely different environment than Darvas did. We have real-time data, algorithmic execution, social feeds, scanners, alerts, and endless indicators. But strip all of that away, and the core battlefield remains the same: your psychology versus uncertainty. If anything, false breakouts are more dangerous today. Why? Because speed compressed is emotion. What once unfolded over weeks now unfolds in minutes. The emotional arc, hope, excitement, doubt, regret has not disappeared. It has simply accelerated. Darvas' principles were built to survive exactly this kind of chaos. In modern markets, breakouts happen everywhere: on 1-minute charts, daily charts, crypto charts, meme stocks, futures. The problem isn't finding breakouts. The problem is filtering quality. Darvas would not be impressed by how quickly a level is broken today. He would ask the same question he always asked: does price accept this new level? Acceptance is the modern translation of strength. If price breaks out and immediately whips back below, that's rejection. If price breaks out and hovers, tests, stabilizes, that's negotiation. If price breaks out and holds, refusing to give ground. That's acceptance. Most traders today enter during the announcement phase, not the acceptance phase. They buy the headline candle, the scanner alert, the social media surge. Darvas waited for silence. Modern tools can help you apply his mindset more precisely if you use them correctly. Volume profiles, VWAP, time at level, and market structure tools all reveal whether price is being accepted or rejected. But tools don't replace discipline. They only expose behavior. Darvas's rule, above the box or nothing, translates today as above the level or I'm not interested. This applies across time frames. A breakout that can hold for multiple candles on your chosen time frame is not strong, it is noisy. A breakout that survives pullbacks without collapsing is doing something meaningful. Modern traders often ask, how much confirmation is too much? Darvas would answer simply, enough that you feel bored. Boredom is a signal. If you're excited, you're early. If you're calm, you're aligned. False breakouts thrive on excitement. Real trends survive indifference. Applying Darvas today also means redefining success. It's not catching the exact bottom or the first tick of a breakout. It's catching the middle of a move with clarity and conviction. This mindset frees you from the need to be right first. It allows you to be right longer. Do you trade more impulsively now that information is instant, or have you built filters that slow you down? Comment below. In the next section, we'll break this philosophy into a step-by-step, practical framework you can apply immediately. No theory, no nostalgia, just execution. Discipline is not a personality trait, it's a process you follow when emotions are loud. Let's take everything we've explored and turn it into something actionable. Not inspirational, not abstract, but practical, something you can apply the next time a breakout appears on your screen. This is the Darvas aligned process for filtering false strength. Step 1. Define the box. Before the breakout, before price ever moves, you must define structure. Identify the range where price has been contained. Clear highs, clear lows, no guessing. If you can't draw the box cleanly, you're already introducing ambiguity. Darvas never defined boxes during excitement. He defined them during calm. Step 2. Let price break. Without you, this step is psychologically uncomfortable, and that's why it works. Allow price to break above the box without entering. Your job is not to participate, it's to observe. If missing the move makes you anxious, that's information about you, not the market. Step 3. Demand acceptance, not momentum after the breakout. Watch how price behaves. Does it hover above the level? Does it pull back slightly and hold? Or does it immediately snap back inside the range? Momentum is noise. Acceptance is truth. Step 4. Enter only after proof appears. Your entry comes after the market has shown restraint. When price remains above the breakout level across multiple candles on your chosen time frame, the emotional surge has faded, dance structure remains. This is where Darvas entered. Step 5. Place the stop where the thesis dies. Your stop is simple, below the box. If price falls back inside, the premise is invalid. No reinterpretation, no widening. No hope. This keeps losses small and information clear. Step 6. Do nothing while price behaves. This step is underestimated. Once in the trade, your job is inactivity. Let the trend express itself. Do not micromanage strength. Darvas didn't babysit trades, he monitored behavior. Step 7. Add only when a new box forms. Scaling is allowed only after structure rebuilds. New box, new acceptance, new proof. Never add based on excitement. This is how trends compound. This process doesn't eliminate losses. It eliminates confusion. False breakouts become quick exits, not emotional sagas. Real breakouts become sustained opportunities. Which step do you struggle with most? Waiting for acceptance, placing hard stops, or doing nothing once you're in? Comment below. In the final section, we'll close this documentary with a cinematic reflection, bringing emotion, discipline, and Darvas's philosophy together into a lasting mindset shift. The market never asked you to be brave, it asked you to be patient. When you look back at your trading journey, the moments that hurt the most are rarely the big losses. They're the trades where you knew something was wrong but stayed anyway. The breakouts that promised strength and delivered confusion. The decisions driven not by clarity, but by urgency. False breakouts are not accidents. They are tests. They test your patience. They test your ego. They test whether you trust your rules or your emotions. Nicolas Darvas passed these tests not because he was smarter, faster, or more informed, but because he was willing to wait when others couldn't. He understood that the market reveals truth slowly and punishes those who demand answers too quickly. He didn't fight false strength. He let it expose itself. This is the quiet power of his philosophy. You don't need to predict. You don't need to chase. You don't need to feel involved every day. You need to observe behavior and respond only when it aligns. When a breakout holds, it speaks calmly. When it fails, it whispers then fades. Your job is to listen. If you take one lesson from this documentary, let it be this: strength that lasts never asks you to hurry. The market will always create urgency. It will always offer excitement. It will always tempt you with motion that looks meaningful, but isn't. Darvas showed us that restraint is not weakness, it's selectivity. And selectivity is the edge that survives time, technology, and noise. So the next time you see a breakout ignite your screen, pause. Let it breathe. Let it prove itself. If it holds, you act. If it fails, you step aside unaffected, undamaged, unchanged. That is freedom in trading. Will you continue chasing strength, or will you start demanding proof? Comment below. Your future trades are listening. This is not the end of the lesson. It's the beginning of discipline.